Hello everyone and welcome to another case study. So let's keep doing these case studies because as the members area is getting a bit more crowded, it's good to have case studies so we can actually kind of like start doing practical stuff. And hopefully next year, once this website, the new website is over, which I've done a bit of a boo-boo on it yesterday, I have to kind of like redo the homepage. We'll see how we can also integrate live trading, pictures, videos into the members area, so we can go a bit more further. We can take another step forward. Now, as you know, what we're doing is trade days, trade hours, and technical analysis. So if we have a time and a price on a specific day, it's a bingo day, and this is how we want to evaluate the situation. So why is it different than other methods of approaching the market? Because we've got time, space, and motion. Currently on the MetaTrader 5, I don't have the motion part because the PST indicator, as you can see down here, is not done yet, but it doesn't have to be, because if you've got a specific way of doing your technical analysis and you can work off the time and price according to your technical analysis, you should be good. All right, you should be just fine. You don't have to depend on the way I do technical analysis, but it just helps. Everything I do is just to make life easier, more practical, less screen time, relaxed trading. This is why we anticipate what will happen rather than sit in front of the screen, stare at it, and wait for something to happen. We anticipate what will happen and when it will happen. And that just makes life more relaxed and chilled out. So let's take a look at gold. I'm just going to minimize myself again here a little bit. All right. I look at gold often because I just love gold. All right, and it just matches the way I trade. Gold just pretty much matches the way I trade. I can't say the same thing for SP 500. Euro dollar and me do get along. Me and gold get along really well. Me and SP 500, we're just like on different planets altogether. So this is from, as you can see, this is, let's make me a little bit smaller, 29th of December. Let's do this, in fact. All right. So this is, this is 29th of December to the 2nd of January. And we've got swing days here for gold, Monday and Thursday or Friday. Euro dollar is a Wednesday. Then we've got Bitcoin Tuesday. We've got SP 500 Thursday or Friday. And then we've got Dow Jones and NASDAQ Wednesday and Friday. Now, obviously, there are days when the market is closed, right? Wednesday, New Year's Eve, probably half day. Thursday is New Year's, so that's a holiday. So that's why I don't have trading hours. I didn't calculate them in on a Friday. We've got those hours, right? But Monday, Tuesday, you can see we've got trading hours here for Monday and Tuesday. So the important thing is, if we're going to trade, we want to know what days are important to trade, so we can catch a swing or a volatile day, or we can catch a breakout, so there'll be some push in the market, or a place where the market would like to or love to turn around. So let's see, gold had a Monday. So we're up, it's a swing day, we want to sell. Gold's down, it's a swing day, we also want to buy. So in my technical analysis video for this day, in fact, if you watch the videos on Vimeo, or sometimes I do put them on YouTube, like yesterday's video I put on YouTube today, or today's video I think I put on YouTube today, this green box was a target for us, which we wanted to get in and buy gold at. Why? Because the market is trending to the upside, as you can see, and it's a strong trend. So every time the market comes into a swing day, want to push to the upside. Coming down into a swing day, want to push to the upside. If we're up somewhere, I don't mind selling. But in most of my videos, you'll see, look, if we're trending to the upside and you do sell, okay, do it with a smaller lot size. I don't mind selling on a high on a swing day, but if the trend is to the upside, you don't want to be taking big risk. Okay, so yesterday was a swing day, Monday, trading day. At trade hours, the vertical lines, as you can see, let's push this here a little bit. Okay, so this is Monday, as you can see here, and that's Tuesday. right? So Monday, swing day. Market pushes down immediately at opening because that was a trading hour. 225 to 235. You can see it's just a 10-minute window of opportunity when the market is there. But obviously you can wait and see market reaction as well. You don't have to dive in, all right? So the market opened up. It opened up nice and easy. And that was Monday. Yes, and that was a good spot to kind of like, yeah, not a bad spot at all. The next hours was down here. Now, what you can see here is this. It's high. The market makes a big sell-off in Asia. Market retraces into a trading hour. Now, the platform is 1 hour behind. So, my trading hour is 5:15 UTC plus 3. You can convert that. You know the website to convert your hours, so it's not a problem. So, on the platform, that's going to be 4:15, which is there. So, 4:15 finishes. The market, after it's done a big push down, okay, comes up to retrace. Now, two things you can do here. You're going to say, okay, you know what? This is an intraday impulse move, which is on a trading day. The impulse started there. The market is at 37.525 at trading hours. So two things you can do here. You're either going to sell here, or you're going to say to yourself, I'm going to wait for a U-turn. You know how to make a U-turn, so I'm not going to go into that. The market chucks a UE, goes down into the next trading hour. In the video, I did say, guys, this should come into here. And it did. Nice muck around in London, New York, trading hours again. And then the market just flushes down all the way into the evening. All right. So why no trading here? Okay, why wouldn't anybody want to trade here? But you could say, but Marty, the market's going up. If the market's going up, why not dive in, go to the upside? But that doesn't match it to our price, does it? Why? Because on the daily, we want to come down here and we want to get in at a time and price where it's good for us. So getting in this zone is not a good idea because the market still has the range it should be closing. All right. So you don't want to be standing in front of it when there's room to come down to close this gap. But what you can do, okay, is the market comes down. It comes into our green bar. Remember the green bar. Okay, remember we had this drawn, like ages ago. And I was saying if gold comes back, well, when I say ages, it must be like at least a few days or several days because obviously I drew it after that. So it must have been at least a few trading days before. So because we're trading intraday or for a few days, like this trade is still open from yesterday, okay, what's happening here is the market's pushing to the upside, comes down. This is where we want to get in at the right time. So that's our price zone here. And that was like from 4,375 to 4,308. So somewhere around there. Okay. So this is your zone. As you can see, the market did a slight wick into 4,304, but we had 4,308 to 4,375. So obviously this is a big gap, right? So we're not just diving in the middle of nowhere or at the top of the range. We have a range, and what we want to do now is say, well, no need to, rush the trade. Let's just see what's going to do. Why? Because we know when the trading hours are. So we're in the zone, and these are the trading hours. Now, if I've got trading hours here, I've got trading hours here. This is a place where I want to trade with a tight stop loss, okay? And this stop loss was down here, okay? Because if you're entering here or here, you want your stop loss just under the low that it did, okay? And then you want to follow through. If the market goes in your direction, you can push up. I always push up if the first trade is covered because I hate to come out of a trade when it's going in my direction, especially. So if it's going in my direction, I want to take a bit of profit and, not lose out on the trade. So it was like minus 360 or 350, and then I pushed it up a little bit. That trade got covered here. Why here? Because this is where the market fell off. Okay, and that got covered right here at the trading hour as well. So once it got covered in Asia at the trading hours, which I wasn't awake at, by the way. Okay, this is just how it is. It's Tuesday, I wasn't up and running. And then this morning I did the video. It must have been around here somewhere when I did the video, 9 o'clock my time, somewhere there. Okay, and this is the trading hours. Now, because we were on a buy mode, because we want to follow the trend up, trading hour, trading day, big fall. This is like, you know, it's been sold to be bought. All right, it's a big fall, as you can see, and the market is going up. So this was a nice trade to get into at the right time. Now, when you're trading with time and price, you're trading relaxed. First of all, you've anticipated your price zone. You've got the days, the trading days in advance. You've got the trading hours in advance. So if things aren't looking aligned, then you don't really go into that trade. You don't have to. Okay, so it's just nice and easy. And from here, you can just manage the trade. Now, the beautiful thing about managing the trade as well, let's see if I've got everything for Tuesday as well. Today is Tuesday, the 30th of December. So I already marked everything in. Let's take a look here for Tuesday. All right, I've put here 1 and 305, but I put that in the morning. All right, so watch today's video, which is already on YouTube. So 1 o'clock is going to be 12 o'clock on the platform time. All right, so as you can see now, we've got a breakout at the trade hour. Nice. Okay, so the market's breaking to the upside. It's all good. There's a slight gap here if it wants to come back down. Okay, but overall it's pretty good. So I can say to myself, let's move this to the upside even further. Okay, and if it goes into a direction, that's going to be the first place. Now, often people get confused when I draw levels. Sometimes they think it's demand and supply, but I normally trade cause and consequence, which is similar, okay, but it's not. Okay, supply and demand is a different ball game, which I'll do a video on that as well, maybe later on. But you guys already know how to trade all of the strategies that I use. Okay, so when I'm doing cause and consequence, I'm looking for a place where they bought heavy, sold heavy. I want to see a place where the market did a reaction. It could be on a daily, it could be on a 4-hour, 1 hour, 15-minute, whatever, you know, whatever turns you on, right? But I want to see a place where the market jumped up. Okay, see the jump up, comes down, jumps up. Another nice place I want to take a look into is right here. In fact, what I can do is now also put an arrow here. I can say, well, it was a trading day, the market's going up, comes back down. This is not a bad spot to buy, because at the end of the trade day, we are now low. So if anybody wanted to get in today, these were the trading hours. Nice and easy again, trading hours. As you can see here, look, we've got a sideways market breaking out at the trade hour. So anybody getting in on a breakout, obviously you need to measure your risk properly, because if you're going to put your stop loss too far out, it's not going to pan out for you. But what you can do here, there's a slight gap here. You can put a stop loss there. Okay, for me, that's reasonable. If I have like 1 to 4, even 1 to 3 is not that great sometimes, when you can get a better juicy trade up here, or you can follow it all the way up into there. So initially that's 360, let's say. If I bring it into, let's say, take profit there, that is already, let's do this, it should be around, yeah, 1,200. So that's already like 1, 2, pretty much 4. Okay, and that's fine. 1 to 3, which is fine, and the first trade is already covered. The reason I like a higher percentage is because I'm taking 2 positions. So initially my risk was 720 bucks. So for 720 bucks, I want to make sure I'm getting something good. All right, and that 1 to 720, if the first trade is covered, great. If the second trade hits, great, but the second trade must be at least 1 to 3. But like I said, I like to go for a bigger target where it's reasonable and logical. Okay, and because the market fell off from there at a trading day, but we're going up, it's a nice strong trend to the upside, I don't mind putting targets up there. Now the second place we want to get in is down here. This is also where the market, you can see, just shot up. Okay, buying here. This zone again is important. So if the next trading day is Friday and the market chucked a UE, okay, we're either going to go into Friday, or the market might say, you know what, we smashed on Monday, let's retrace and smash into Friday, which is fine if you know the days in advance, because in any case, Friday is either your trading day or it's your get ready for the weekend day if it goes in your direction. All right, and that's how we want to use the trading days, knowing in advance how far this can go. Obviously, we're managing the trade along the way too, and that's the whole idea of having the trade hours within the day. And when those trade hours come to places where you would normally trade technically, you've got the confirmation on price and time. It's like ease of mind. It just makes your trading relaxed because you've anticipated what's going to happen and when it's going to happen, and it is happening at that price at that time. So your trading is much more relaxed. In fact, this is why I can just like leave a trade open overnight and not get stuck with it, because why would you? You've like covered it, you've done your homework. This is a zone you want to get in at. That's the trading hour. You got your stop loss, you got your risk reward covered in. So even if things go pear-shaped, you know what's going on, and you entered with time and price, which doubles your risk reward in terms of getting the trade right. So your hit rate is much better with time and price, and your target measurement, because of the trading days, is much better. Your risk reward is going to be much better because you know how far this can go. You know if it turns pear-shaped, you know it could go all the way into Friday. You know if it goes up, it could go all the way into Friday. What also gives you a good edge here is if the market starts to shoot to the upside, right, then you can get back in on the pullbacks. Also, another beautiful thing. Let's take a look at this. This is an impulse wave, a big push to the downside. And as you can see, this is the market going side up. It's not very exciting at all. In fact, this is like, well, after an impulse wave, this could be like, we could be going down, because this could be like a flag formation. Okay, which it looks like it. All right. So what does that tell you? Well, you could say, crikey, the market has gone after the impulse wave into a flag formation. So this channel could just collapse to the downside. So I'm looking at my trading hours. We've got a breakout. And when's the next time I have a trade hour? Well, let's take a look. Tuesday. Now look, what I've said for Tuesday is tricky day. All right. So I want to be on top of my trade at 1 o'clock and 3:05. So 3:05 is 2:05 on the platform. So I'm coming here. It's 2:05 is going to be on that bar. All right. So I want to make sure when we're here, okay, and I want to make sure that things don't go pear-shaped and we end up in a loss. So knowing the hours allows me to track the trade at the right hour. So I'm looking at the hours. Okay, we've got a breakout. Okay, we're still in this flag formation. Okay, all right, so heads up. And Marty did say, what did Marty say? He said it's a tricky day. All right. So working on that is good. Sometimes you'll see me making comments like, you know, we have a target, it's a closing, blah, blah, blah. And when I have those targets as well, then what I also do is just follow it to the target, okay? But I'm managing the trade as we go along. Okay? And that's basically how it is. So this is a nice example where you can actually take some profit going against the market. This is like a scary situation. It's like a knife falling down and you don't want to be trying to catching it. You don't want to stand in front of a fast moving train. You can see that this is like a retracement that the market is doing, looking for a place to sell again. It looks like it, you know, impulse flag formation. Okay, fine. And we're aware of that. So knowing the technical analysis, knowing where the pricing can change at the right hour allows us to, you know, like be in tune and have a relaxed attitude towards trading. So you don't have to rush your trades, you don't have to muck around, you don't have to get stuck in front of the screen. You know what to expect, when to expect. Let's also take a look at Bitcoin, because Bitcoin's got a swing day today. And it also had these swing days as well. And let's do this. Now, I don't have the weekends on this, but we had for Bitcoin last week, I did say, look out for Sunday, didn't I? And because I don't have the weekends on this platform, I'm thinking Sunday was probably somewhere around here, and that's how the market opened on Monday. And I did say, guys, we're okay to buy, in my opinion, to go up here, but we have to be careful. Why? Because look, technically, this is bearish. This is a pennant. They sold off right on there. Okay, so if I get rid of this, let's say, okay, so momentum wise, whoops, you see I've got a bit of room to go up this week, but you know, it's just tricky because this has got room, this has got room to come down. Okay, so let's see what will happen. So on the daily, okay, so today, as you can see, Bitcoin, we've got a Tuesday. All right, so Tuesday's a swing day, Tuesday morning. Trade hours, Tuesday morning. All right, so if you're going in, trade hours, okay, to the upside, you're okay. Obviously, this is a bit of a tricky situation. Why? Because the market, look, what's going to happen at lows and tops? We're either going to accumulate or we're going to distribute. Okay, so people are going to accumulate it or distribute it. So what's giving us the idea? Well, you know, if we break to the upside, pull back at a trading hour, you want to get in, you can. If we have a breakout closing above these, let's get rid of this as well. Right, closing above these resistance levels here from Monday. Okay, that's like closing in the US. Asia opening. Market goes up. This is London. Okay, London at the trading hours. This is a pre-trade session, by the way. Okay, because London's like 3 hours behind me. And then boom, to the upside. At the trading hour, you can see the market stalling. Trading hour again, pushing to the upside. Still, the market has not closed above that high, but it's got potential to go up. Why? Because of the gap. Here you see the gap right there. So you got room to go up. So can this go up? Yeah. If you do your technical analysis correctly, it's doable. Also, what you can do on a smaller time frame, if you're trading on an intraday, if you're scalping, if you're like, you know, let's go, nail it, blah, blah, blah. Intraday, you can always put your, you know, like resistance levels. Okay, we broke up, come into a trading hour, let's go. Obviously, you need to have a bias, but the bias is given from the trading days, right? Let's get rid of that. If I know that Tuesday is a trading day, okay, and the market is low, you see we're down here, and we've got a target up here. Remember, I put this up here like last week. So if we want to push up, into this zone, and then we'll have like a, like a 1, 2. Well, if it goes back up again, want to sell down. So selling the highs, buying the lows, and this is the place where the market, as you can see, is like being closing above the line. So going up from the lows into there was logical, okay? But because I'm expecting the market to fall, okay, because of the bigger time frame setup, okay, I wouldn't be pushing my luck with it. What I would be doing though, if you're going to get in, if you love trading Bitcoin, you get in at the trade hour, you take your profit, you call it a day, make sure risk management is good, and then you say, all right, have a good one, we're getting out. And that's how it is. If you want to keep a position, you can do the same thing as I do. Get in, take profit, then push your stop loss on the remaining part of the option, of the trade, remaining part of the trade. Keep a stop loss tight, which will still give you a profit if you get stopped out, and just let it go and enter into new year, with peace of mind. All right, and that's how it is. If you don't want to keep a trade open over New Year, because the market does get screwed up on the 2nd of January, sometimes it does happen, they just mess it up, that's fine. You can close it whenever before the market is closing. All right, and that's how it is. Another good one is a euro dollar. Let's take a look at that as well. With the euro dollar, this is a sell zone. Trading days, you can sell the zone. But look where I want to buy. I've got trading day for the euro dollar on Wednesday. All right. And Wednesday is a half day, so we're either going to find ourselves up here or something crazy is going to happen and we're going to find ourselves down here. Think of it like the gold example, right? I do want to go long because I think euro is going to go up, and I'm bullish on the euro, and I've said it on numerous occasions. I do want to buy. In fact, I got us into the market right at the bottom there, okay? And with our technical analysis, it was like, okay, this is the place where we're getting, and it matched a swing day, a trade hour. It was like magic, okay? And the market just pushed to the upside. So I am bullish with the euro dollar, and we should be going up into 1.5 over the long term. I know it sounds crazy, but this is the monthly, so don't worry about it. But this is the zone. So you don't want to be buying the tops. What you want to be doing is buying a low. So if we come back down here, we want to go in heavy, right? You want to go in heavy at the right day, at the right time, at the right price. But you could say, like I always say, but if the price gets there, we'll be buyers anyway. Why would you need time? Like I said, when you have time, you trade relaxed because you've got the trading hours in front of you. You know at what time during the day the market is very highly likely to move. So that gives you a really extra advantage. Also, sometimes, for example, the market will come in here, right? Let's say it dropped in here on a Wednesday, and at the end of Wednesday, it did a low, okay? You can always wait for the next day, okay? Because if the market smashed down, it was a trading day, like with gold, right? You could wait for the next day and say, you know what? I'm going to go long with this because it's at the right price, and we made a swing day in that zone and the market fell into it. So the next day is a good day to follow up and push because your bias is now confirmed as well. And that does happen sometimes. Look, for example, here. See how this trading days got confirmed pretty much at the end of the day. So it goes up and they sell off. So the next day, any retracement to the upside, you want to sell to the downside. This is already a sell zone. So two things you can do, like I always say. If it comes into there, you check your trading hours. If it's a trading hour, you can go to your smaller time frame, wait for a U-turn, wait for a reaction in a smaller time frame, like some people do. Impulse pull back and let's get back in kind of thing. That's also good. The important thing is the trading days and the hours, and then you can wait for a setup. You're not glued in front of the screen. You're not following the trade with respect to its price. You don't have FOMO. You don't have FAMO, because the last thing you want to be doing is mucking around and finding out later that things are going to go bad, okay? Because it's like going up and down, up and down, up and down. For example, for Monday, let's take a look here, right? see how the market was just going sideways. Okay, so the only thing you're really doing, you've got a high, you've got a low. If you're going to intraday trade that, okay, this is your high and low here. Asia high, low. All right, so your trading hours for Monday. Expect surprises as we get to 12 o'clock. 12 o'clock is 11 o'clock my time. So where's 11? 11 is there. Right on there, 11 o'clock, right? So 12 o'clock my time, 11 o'clock on the platform. Surprises as we get to a nice little surprise, and then another surprise. See how the market bangs to the downside. So knowing these, knowing that we can have a surprise as we get to midday, and then the next hours is 2:55. I got 1:55 on the platform. Let's see where 1:55 on the platform is. 1:55 on the platform is there, all right? And this is where Asia sold, Asia bought. Market comes down into there, 1:55, and then we've got 7:25, which is 6:25. 6:25 is on that bar there, and then we've got 9:45. Was it 9:45? Yep, which is 8:45. And 8:45 is going to be 7:45 on, well, wait a minute, 9:45, 8:45 here. All right, so this is the zone where they bought. And if you're going to buy, see if you bought where they bought before, you would have been stopped out. Okay, you could have said, well, this is where they bought. Fine. All right. If you bought after that time here, well, you would have been okay, I guess. Okay. But that's the U-turn. That's the U-turn. Technically, if you did it without hours, you'd be waiting to get in on a bar. If you used, for example, smart money concepts, I don't know, where they bought before, you might have maybe gotten stopped out on an intraday. But knowing the hours, it just gives you confidence because you can see, okay, so we're down here. They bought here before. This is okay. Trading hour, market going up. I can get in. If you get in there, your stop loss needs to be like very tight. You shouldn't put a stop loss too far out if you know the hours. Another big advantage, because if you got the hours right, then it shouldn't go back. It shouldn't go the other way. It should be turning or breaking out. And that's how it is. All right. So like trading at the right time, as you can see, bang, market comes down. They bought here before. So the only place where you can buy again is at the lows where they bought again. Is it the right time? Yes. So this, if you bought here, maybe you would have gotten stopped out here. Or if you waited for that hour as a U-turn, you can go in. And that's really scalping the market. But remember this. Here, when we're up here, the market is up. So we're not looking to buy. We're looking to sell. All right? You're only looking to sell if the market is high. You're looking to buy if the market is low. So here, the only thing you would have done is sell at trading hours, because the market went up into your trading hours. Your bias is to the downside, so you want to sell. The only trade you would have taken in that day is down here. And this hour you would have been careful at, because the trading hour, and because they bought here, you definitely would have locked in profit, moved stop forward, and whatever, however you managing your trade. Okay, so I guess that's how it is. But with the euro dollar, like I said, knowing the trading days, you're going to know your bias, you're going to know where to get in, and if it matches, everything's going to be bingo. All right, I hope the case study helps. Once again, very stress-free way of trading if you anticipate what's going to happen before it happens. So it's like having tomorrow's newspaper in your hand today when you're trading. And because I've got the full month posted, it's like you've got the full month's newspaper in your hand before the month even starts. Have a great new year with your family and your loved ones. I hope 2026 works out for all of you. And good day and checking out.